Let's dive into the remarkable journey of Bitcoin, a digital currency that has gone from being a niche technological experiment to a widely recognized financial asset. Bitcoin's story is not just about the rise of digital money, but about innovation, disruption, and an evolving narrative of what constitutes value in the modern world. The inception of Bitcoin is shrouded in mystery, beginning in 2008 with the release of a white paper titled Bitcoin, a peer-to-peer electronic cash system. The paper was authored by the enigmatic Satoshi Nakamoto, whose identity remains unknown to this day. In this document, Nakamoto outlined a revolutionary concept, a decentralized digital currency that allowed people to conduct transactions securely and anonymously without the need for a trusted third party like a bank or government. Bitcoin officially came into existence in January 2009, with the mining of its first block, known as the Genesis block, or Block 0. Within it, Nakamoto embedded a message referencing a newspaper headline about bank bailouts, symbolically highlighting the motivation behind Bitcoin's creation: to offer an alternative to the traditional banking system prone to centralization and crisis. In these early days, Bitcoin was largely a technical curiosity. Enthusiasts and programmers were attracted to the groundbreaking blockchain technology underpinning it, a distributed ledger that ensured transparency and security through cryptographic principles. Bitcoin mining, the process by which new bitcoins are created and transactions are verified, became a hobby for those interested in this novel technology, and the first transactions involved transferring tiny amounts of value, primarily for testing and exploration. The first known real-world transaction using Bitcoin came in 2010 when a programmer named Laszlo Hanich famously paid 10,000 Bitcoins for 2 pizzas. At the time, this seemed like a fair trade for a bit of fun and novelty. Little did anyone know that these Bitcoins, over time, would be worth millions of dollars, demonstrating the unpredictable nature of Bitcoin's valuation journey. Bitcoin's journey to mainstream awareness began in earnest around 2011 when it started garnering attention from the media and investors. Enthusiasts began to see Bitcoin as digital gold due to its finite supply capped at 21 million coins. This property mirrors gold's scarcity, contributing to its appeal as a hedge against inflation and traditional financial systems. As interest grew, so did the number of exchanges allowing people to trade bitcoins for fiat currencies, making it easier for individuals to invest in and hold Bitcoin. However, the path to acceptance wasn't entirely smooth. Bitcoin's anonymity and decentralized nature unwittingly attracted use in illicit activities on platforms like the Silk Road, a dark web marketplace. The association with illegal trade cast a shadow over Bitcoin's reputation, leading to increased scrutiny and regulation efforts by governments around the world. Despite these challenges, Bitcoin's underlying technology and value proposition continued to attract legitimate interest and investment. In 2013, Bitcoin experienced its first major price surge, reaching over $1,000 per Bitcoin. This milestone captured the imagination of the general public and brought a fresh wave of investors eager to capitalize on the next big thing. Venture capital began to flow into the ecosystem, funding startups and innovations that would broaden the use of Bitcoin and its blockchain technology. The crypto community witnessed the emergence of altcoins, alternative cryptocurrencies designed to improve upon or serve different functions than Bitcoin. While Bitcoin remained the dominant force, these new coins expanded the dialogue around blockchain technology, application potential, and financial decentralization. As Bitcoin continued its ascent, scalability concerns arose. The blockchain's limited capacity to handle transactions led to network congestion and high fees, challenging Bitcoin's utility as a daily currency. This issue sparked debates within the community regarding solutions, most notably resulting in the creation of Bitcoin Cash, a hard fork designed to increase block size and transaction throughput. The mainstream financial world started to take serious notice around 2017 as Bitcoin hit new all-time highs, sparking both enthusiasm and skepticism. Financial institutions began exploring Bitcoin's potential, looking at it as an asset class rather than a pure currency. Some viewed it as a hedge against economic instability, while others saw it as a speculative bubble destined to burst. Despite Bitcoin's volatility, its acceptance continued to grow. More businesses began accepting Bitcoin as a form of payment, and major companies like Tesla and PayPal made headlines by integrating Bitcoin into their ecosystems. These endorsements lent credibility to Bitcoin as a legitimate financial instrument and widened its market. Regulations also started to crystallize, with various governments enacting measures to oversee the use of Bitcoin and other cryptocurrencies. While some countries embraced them as innovative financial technologies, others imposed strict regulations or outright bans, citing concerns over illegal activities, financial stability, and consumer protection. Navigating this regulatory landscape became a critical aspect of Bitcoin's journey toward mainstream acceptance. The global COVID-19 pandemic in 2020 acted as an unexpected catalyst for Bitcoin's growth. With traditional markets experiencing volatility and central banks implementing massive stimulus measures, investors sought out Bitcoin for its perceived scarcity and independence from governmental control. This behavior propelled Bitcoin to new heights, reaching over $60,000 per Bitcoin in 2021, and reaffirming its position as a focal point in discussions about the future of money. Bitcoin's environmental impact also came under scrutiny as its energy-intensive mining process drew criticism. This has led to ongoing discussions about sustainability within the Bitcoin ecosystem and spurred innovations in green energy mining solutions, highlighting the continuing evolution of the space. As we look at Bitcoin's current landscape, it is evident that it has carved out a significant role in the financial world. From small-time investors to large-scale institutions, the digital currency has found a diverse base across demographics, geography, and industries. Its role has shifted from an experimental digital currency to a multifaceted financial asset that integrates elements of technology, economics, and even socio-politics, challenging traditional monetary systems and the notion of currency itself. Bitcoin's volatility remains a double-edged sword, offering extraordinary opportunities for gains while presenting risks that require careful management. As a result, educational resources concerning Bitcoin and cryptocurrencies have proliferated, seeking to equip individuals with the knowledge needed to navigate this complex landscape responsibly. Furthermore, Bitcoin's influence extends beyond finance, inspiring a broader blockchain-driven innovation wave. Smart contracts, decentralized applications, and NFT ecosystems have sprung from the fundamental ideas that Bitcoin brought to the fore, pushing the boundaries of decentralized technology and exploring new realms of creativity and utility. In conclusion, the history of Bitcoin is a dynamic tapestry woven from threads of innovation, resilience, and disruption. From its mysterious beginnings to its rise as a global financial phenomenon, Bitcoin continues to capture imaginations and challenge norms. Whether seen as a revolutionary force reshaping monetary landscapes or a speculative asset in a digital age, Bitcoin's journey is a testament to the transformative power of technology and the evolving narratives of value in contemporary society. Its future remains uncertain but undeniably significant, as the world continues to explore and embrace what this digital currency represents.